Hello everyone, my name is Isaac. You are welcome to the Digital. Today we are going to look at the financial statement of sole proprietorship. Okay, good. So under this financial statement for sole proprietorship, we are going to look at two financial statements, which is the profit and loss or the income statement and the statement of financial position or the balance sheet. Okay. So for the profit and loss, it will consist of our income and expenses. And the balance sheet or the statement of financial position will consist of our accounting equation, which is the assets, capital, and liabilities. Okay. So you will see that we have all the five elements included under the financial statement for sole proprietorship. Okay. Good. So the income and expenses will be recorded in the profit and loss account. Then the asset, capital, and liability will be recorded in the statement of financial position. Good. For sole proprietorship, normally they will give you a trial balance. Okay, they will give you a trial balance. The trial balance here is the list of total credit balances and total debit balances. Okay, so all the balances you have to know, all the elements or the items given, you have to know which element the items given falls under. Okay, and also you have to know the balances for assets, capital, liability, expenses, and what? Income or revenue. Good. If you're able to know this, you'll be able to know how to treat each of the items stated in the trial balance. You have to note that the assets and expenses will have a debit balance. Okay. Then the capital, income, and liability will have a credit balance. The assets and expenses will have a debit balance. That means that you see it's a list of the debit balances and credit balances. So whenever you see an items figure under the debit column, it means that that item is either an expense or what? An asset. Do you get it? If you see that item or the figure under the credit side, it is either the item is what? Capital, is a capital, liability, or what? Income or revenue. You get it? So if you don't know and you are at one point in time where you have to list your expenses and you are now going through all the items, you'll be wasting my time. So you have to know that, okay, if I'm looking for expenses, I'll just have to check the debit side. So the debit side, I know that it's either assets or expenses that are there. So I'll check the debit side and fish out the expenses. Okay, good. Same for income or any other item under the financial statement. If I know that liabilities have a credit balance, therefore the item will be recorded under the credit side. When I'm fishing out my items, I just go straight to the credit side to look for my liabilities. You get it? Because I know that the liabilities will be found under the credit side or the credit column. Good. So now we'll just dive into the format for the profit and loss or income statement. Then we'll dive into the format for what? Statement of financial position. Yeah. So with the statement of financial or the profit and loss, you just write your heading, okay, the organization's name. You write the organization's name. Okay, so if they give you maybe Men's Isaac Enterprise, you are going to write Men's Isaac Enterprise and you underline it neatly. You get it. So whenever you are giving the question, you start with your what? The organization's name or company's name. Good. Then you come to the requirement. What did the question require of you? Okay, so the question will tell you to prepare your profit and loss. After that, you prepare your statement of financial position. Okay, so now I come here, income statement, okay, which is the same as profit or loss for the year. Okay, it will give you the particular year or the period in which that um, the company prepared his financial statement up to. Good. Then you underline it in the T. Okay. So it can give you as at 31st December 2020. So you add it for the year 31st, you get it. If it is asset, you use the same asset. Good. Now you come to, you just bring your, let's use Ghana cedis because but if they give you a different currency sign, you are going to use that currency sign. So let's say in the question, the figure or the currency sign given to you was Ghana cedis. So you have to show Ghana cedis. Good. So if it was dollars, you show your dollars. They get it. Good. So what you have to start with in the income statement is your sales. So it's just about knowing the format. They get it. Just put the format in your head. That is it. Good. So you have your sales here. You bring the sales to the last Ghana cedis. They get it. Then you look out for your returns inwards. Note, returns inwards is the same as what? Sales returns. Okay, so you bring your return inwards. Or sales returns. Good. Okay. The return inwards will be said in the trial balance. So if you see return inwards, you bring it under the sales figure. You get it? If you don't see returns inwards, you see sales returns, you bring it under the figure. If you don't see sales returns, they'll either tell you returns, okay, returns, and you will see one under the debit side, one under the credit side. You get it? Good. So I said the debit side reports are expenses, and the credit side reports, the debit side reports expense and assets, the credit side reports liability, capital, and income. Good. So if we've made sale, which is bringing us an income, and they've returned back the sales we made, is it an income? It's no more an income, but an expense. Okay, so you will see your sales returns at the debit side in the trial balance. Do you get it? So if they don't say return inwards or sales returns, they'll say returns, and you see one figure of the returns at the debit side. That is the sales returns. Do you get it? Good. So you bring that figure here. Note, that figure will be subtracted from the sales. You get it? Because we made sales and they returned it back to us. So we have to subtract it from the sales. And we'll get another figure called net sales. Okay. So after subtracting this from this, what we get is net sales. Good. Then we'll come here to less our cost of sales. Okay. So with the lesson of the items under the cost of sales, you first have to know that the format has to start with the opening stock. Okay, good. So with the opening stock, this is how you see. Okay, so this stock too will be found. Stock is an asset. Okay, so you will see it at the debit side of the trial balance, and you show that one here. This one was here. This side of the cost of sales is going to be shown here. Okay, so like this. Okay, sometimes they will not say opening stock, but they can give you a first date of that month or year. Okay, so let's say 1st January 2022. Okay, so if the period is starting from June 1st, it will say 1st June. You get it? We're showing that is the opening stock. Good. Then you come here to add purchases. Okay, you add purchases. Normally, we know that we add, but for you to know that we are adding, I just want to bring the add for you to know that we are adding those items. And these, the ones in brackets mean that we are less in them. So we add our purchases to the opening stock. After that, you come to carriage inwards. Okay, so add our carriage inwards. Good. We'll add our carriage inwards to the opening stock. Then we will, good, so we'll bring our figure here. Then we'll let any drawings. Okay, if there was any bruised drawings, you have to list it from these figures. Not cash drawings. The question can give you cash drawings and bruised drawings. What you have to note is that you will list your bruised drawings from these items, not your cash drawings. Okay, good. So when you come here, let's bruised drawings. So as I said, they will be subtracted. Okay. So now we are going to less returns outwards. Do you get it? We are going to less our returns outwards. So I'm just giving out the format of how the profit and loss looks like. So if you don't see returns outwards, you are going to see purchases returns. Okay, so that one too will be less. Good. Then after that, you perform your calculations. Okay, so you add these three, you less this from these three, you less this also from. So it's like you add this and less from these three. Okay, you add this and less from these three. You add these three, add these two and less from. You get it? So this plus this plus this minus this minus this. Then what you get to be the cost of goods available for sale. Okay. Good. So after this, you bring your closing stock. Okay, so less closing stock. This add and less that I'm bringing here is not necessary. But for you to know that this is what I'm doing, I'm lessing and adding. That's why I'm showing it there for you to know what I'm doing. So when we come to the closing stock, we are going to less it from the cost of goods available for sale. Okay. Then what we will get here is cost of goods sold. So this amount is called our cost of goods sold. Then if there is any wages, okay, we'll add to the cost of goods sold. Do you get it? If there's any wages, you add to the lesson. Some people also send the wages to the expenses side, okay, which is not very wrong. But in the ideal case, we add the wages to the cost of goods sold. Okay, so when we come here, we bring add wages. Yes. If there is wages and salaries in the trial balance, don't bring it here. For wages and salaries, it is going to the expense side. Okay, so when we reach a point, we are going to less all our expenses. That's when we are going to see wages and salaries. Do you get it? But for this side, if in the trial balance the question or the item is only wages, then you bring it here, you add it to the cost of goods sold. You get it? So we have our wages figure here. After adding, what we get is the cost of sales. Cost of sales. Good. So with this figure that we've gotten here, we are going to less this from our net sales. Do you get it? So this is the format actually. So after arriving at your cost of sales, you are going to less this figure from this figure. Do you get it? Good. Normally, it's not every item that I've written here that you see in the trial balance. Okay, sometimes you have your opening stock, you have your purchases, and sometimes you will not have your carriage inwards. So since you already know your format or your format is in your head, There is no carriage inwards in the trial balance. Good. So you just jump carriage inwards towards goods drawings. Good. If there's no goods drawings again, you jump goods drawings, you less your returns outwards. So let's say there was no carriage inwards, there was no goods drawings. So when I add these two, I'm going to jump towards return outwards or purchases return and less it from those two. You get it? Because there were no carriage inwards and goods drawings. But in the case there was no carriage inwards and there was goods drawings, I'll let the goods drawings from these two, then less returns outwards two. So just know the format. If you go and one of the items is not there, just jump. Okay, good. So you can go and there's no wages. If there's no wages, you end here because there's nothing to add to get cost of sales. If there's no wages, this cost of goods sold is what is going to be subtracted from the net sales. Do you get it? Good. So if there's no wages given to you in the question, when you get here, that's all for the less cost of sales. You are done. So this figure is what you are going to less from the net sales. But since we have wages here, we add it to the cost of goods, so we get our cost of sales. The cost of sales is what we are going to less from the what? Net sales. So with this amount, we'll bring it here. It should be in the same line, okay? You less that same amount you got here from the net sales. Do you get it? So it's either you are going to get a profit or you are going to get a loss, gross profit or gross loss. So if this cost of sales is bigger than this net sales, you are going to get gross loss. But if it happens that you get a positive figure after subtracting, that is the gross profit. That means that the net sales is higher than the cost of sales. Do you get it? Good. So we will subtract from that and we are going to get gross profit. Okay. So there's no space, so let me force it here. Good. So we are going to get our gross profit. Okay, since there's no space, I'll clean and we are going to continue from the gross profit. Okay, so it's just a continuation. Okay, so after getting our gross profit, what we are going to do is that we are going to add other income. Okay, so when we come here, add other income. Okay, good. So with this, you can get numerous incomes. Okay, but I'm just going to list some of the incomes you can get. Okay, so you can get discount received. You can get commission received. And also decrease in provision for doubtful debts. Okay. To all these, the discount received will be added like this. Your commission received will be added. Then decrease in discount received will be added. Then what you are getting there is your total income. Okay. So that is going to be the total income. So this is your total income. For this decrease in provision for that debt, in fact, with the other income and expenses that we are going to look at or we are looking at, there will be some calculations you have to do over there. Okay, good. Wait, let's start with the provision for that debt. Okay, so with this one, they can give you the item in the trial balance. Okay, it can be allowance for irrecoverable debt. It's the same thing. So when they give you that in the trial balance, that figure in the trial balance, you will see that there is a figure which is for provision for doubtful debt in the trial balance. And it will give you a sentence relating to the provision for doubtful debt, okay, to calculate for it. You get it? When they give you that statement, and after calculating for your new provision, That trial balance is your previous provision. Now they are going to ask you or require you to calculate for a new provision. If you calculate for a new provision for doubtful debt and you see that that provision you've gotten or your new provision is less than the one in the trial balance, then you have to bring that difference here. Do you get it? So if the old provision for doubtful debt in the trial balance was let's say 100, and you calculated for your new provision and you had 80, okay, there has been a decrease in the provision for doubtful debt. So with that one, you are going to what? Bring that the knowing that there has been a decrease, that means that it's going to be what? An income. But what are you going to, which figure are you going to record? You are going to record the difference. Okay, so the 100 minus 80 is going to give us 20. So the 20 is what you are going to record here. Do you get it? Good. With the other items too, related to, let's take discount receipt. Okay. They can tell you that in the additional information that discount received owings amounting to this. Okay. When you see owings or outstanding or accrued, okay, or accruals, what you have to note is that basically just add that figure to the initial amount in the trial balance. Okay. Just add that figure to the initial amount in the trial balance. The meaning to this is that that owings is pertaining to that particular period in which we are preparing the financial statement. Okay, and as I already said in the introduction to accounting, whatever we are doing here has to relate to that particular year. Okay, because we are preparing this based on the accrual basis, not the cash base. Okay, so we prepare this when the event has occurred, not when the cash related to that event has been received or paid. Do you get it? So whether it was an owing, we didn't receive that money, but that money is relating to that particular year. Okay, so we have to add that amount to the item in the trial balance. They'll give you the information in the additional note. You add it to the trial balance, the figure in the trial balance. What I'm trying to say is that basically when you see accruals, outstanding, owed, accrued, just add that figure they are talking about to that figure pertaining to that item we are talking about, to the trial balance figure, to the figure in the trial balance. Do you get it? So if they said in the additional info that discount received, discount owed, okay, or owed accrued discount received of 50 cedis, and in the trial balance you have 100 cedis for discount received, add the 50 cedis to the 100 cedis. What you get right there, that's what I'm trying to say. Good. So after getting a total income, these are some. Okay, you can get other income. So it's up to you to know the other incomes you can get in your question. Okay, so some of the income they'll give to you, you add it to the gross profit. What you get is your total income. Then you come here, you less your expenses. Okay, so you less your expense. Okay. The expenses too can be numerous. Okay, you can have discount allowed, you can have rent, advertisement, wages and salaries, depreciation. Good. You can also have increase in provision. So it's just like this one, there was a decrease. You checked for the new amount, it has decreased. You knew because it was a decrease, you are going to report as income. When it is an increase, even you not knowing the difference by which it increased to or by, you are going to know that since an increase, you have to record it under the expense. But under the expense, you are going to use the difference by which it increased. Do you get it? Yes. So now we have some of the expenses too. We have discounts allowed. We have rents. We have rates. We have advertisements. We have salaries. We have depreciation pertaining to a particular asset. Okay, good. Then this side recorded the what? Incomes. So this side is going to record the expenses. It's just as I said, the trial balance is recording the expenses at the debit side. Okay, the balances of the expense here. And the right side is for the income. You get it? So here they are expenses, so we have to bring them in. Good. Then you add all of them together. Okay. Someone can decide to just add straight away and bring it here. But I just want you to know what that item is for. So let's show it here as total expenses. Okay. So this is your total expenses. After that, you bring this expense here. You get it? That same amount you had. Okay. So you've added this figure, leave it here. Come to the expenses, add them to. After adding them, what you get is your total expense. You bring it here, this same amount, you bring it here. You less from the total income. And what you are going to get is either going to be a net profit or net loss. Do you get it? Good. So, net profit or net loss. And most of the times we get a net profit, but you can also get a net loss when the expenses is deemed to be greater than the total income. You get it, you can get a net loss. But when you find out that the total income is greater than the expense, you are going to get a net profit. You get it. Good. So that will be all for the profit and loss account or the income statement. So as I said for this one, you can also have an additional information that will require you to work for any of the items and the expenses. As I said, always to be added to the initial amount in the trial balance. When you see prepayment, advance, you have to subtract for the item it is related to. What item the question is for. So if it says rate prepaid, maybe 100 cedis, and the rate in the trial balance is 200, or let's use 150. Okay. Now what you are going to do is that they said the rate prepaid is 100 cedis. Now the actual rate in the trial balance is 150. Just subtract the 100 from 150. I'm going to get 50. Just bring the 50 here. They get it. Good. So that's all for the profit and loss. So as you are adding approvals to the item, you less quickly from the item. So we are going to move on to the balance sheet. Okay, so we'll move on to the statement of financial position. Okay, so they'll give you the date, the period, and then you write the date there. Okay, good. So with the statement of financial position, you have the three currency signs or columns. Then you start with your non-current assets. Okay, so you are going to start with non-current assets. Good. So with this one, this first currency sign is going to have a cost, the cost of the non-current asset. Okay, so the cost, and this side is going to be the accumulated depreciation or the provision for depreciation, and this one is the net book value. Okay, so after depreciation, how much was the item now? Okay, good. So with this one, you have to know the non-current assets, okay, so that you will see that, oh, in this trial balance, this one I'm seeing here is a non-current asset, and the assets you are going to see at the debit side of the trial balance, okay, under the debit column. Good. So the initial cost of the item you are going to see is what you are going to write here. Okay. So if the question asks us to calculate for depreciation on that item. We will calculate it. First of all, we calculate that depreciation, show that depreciation and the expense, and also show that depreciation under the or in the balance sheet. Okay. So what you have to note is that the additional information items are recorded twice. Okay. Good. And the items in the trial balance are just recorded once, either only in the balance sheet or only in the income statement. Do you get it? Good. So if we see any item under the additional information, that means that that item has to be recorded twice. It has to be reflected in the financial statement twice, or it has to be treated twice. Do you get it? Good. So the assets they will give to us, the non-current assets, okay, good. They will give to us will be listed here. So some of the non-current assets, I'm going to list two. We have motor van, let's say office equipment. Okay, so let's say these are the non-current assets they gave to us in the question. The trial balance will have the cost or the figure for these assets. Those ones you have to show them under the cost. Okay, good. If there was any depreciation we calculated on these items, we will calculate them because the depreciation will always be shown or be told. They will tell us to calculate the depreciation in the additional information. Okay, so check in the additional information. Was there any depreciation they told us to calculate? Yes, and we know that if there was anything like that in the additional information, we have to treat it twice. So that depreciation we calculated, that actual depreciation we calculated, that was in the additional info, will be shown in the less expense, the income statement. We had a less expense there. Under the less expense, you show the depreciation for that item they told you. Good. Then when you come here, that same item or the depreciation you calculated for will be here. In that case, you treated it twice. It was in the additional info. Good. If there was any other provision for depreciation in the trial balance, first of all, sometimes they can give you depreciation for that item in the trial balance, pertaining to that item in the trial balance. Then they will give you another additional information relating to that, or another depreciation relating to that particular non-current asset. Okay, so with that one, we know that additional information we have to treat it twice. So with that one, we are going to add the additional information depreciation that we calculated to the provision for depreciation in the trial balance. Okay, the depreciation in the trial balance will add the additional information depreciation that we calculated together, then we'll show it here. Related to the particular item in the question. Okay. Sometimes it can be only motor van that you see a depreciation there. But if there was no depreciation in a footnote or additional information, and there was a provision for depreciation in the traveler, we just carry it here. Do you get it? Good. Or there was no provision for depreciation. We only had additional info and it told us to calculate depreciation. After calculating, we bring it here. Additional info, so we know to bring it in the expense because it's an expense related to that particular item. Good. So if there was any depreciation, we bring it. So let's assume all these assets had depreciation. So what you are going to do is that to get the net book value, you are going to subtract the depreciation from the cost to get new cost. That is what we call the net book value. Do you get it? First of all, this is our old cost. So let's say we are in 2024 right now. 2023, the asset cost was valued at this price. During the year 2023, it had a depreciation, okay, for 2023. That depreciation was carried forward to 2024. And in 2024, we are going to have another depreciation for that item, going to depreciate. So that item relating to that particular year is an expense. We'll bring it here. If there was any previous depreciation, we'll add it to this particular year's depreciation and bring it here. Do you get it? Okay. So we are going to less this from this to get what the actual value of that asset as at the time we ended our period. Do you get it? So we less this from this, less this from this. What we get is our net book value. Okay. So total it. So we assume there are only two non-current assets. We total it, close it, but we are going to work with this one. Okay, so we are not going to close it. So this is what we are going to work with. So after doing this, you leave it there. Then you come to your current assets. Okay, so with the current assets, you start with stock. Okay, as a normal way of doing it. You start with stock based on liquidity. Okay, so you start with stock, then you start with the stock with the in the second currency sign or the second column. Okay, so you bring your stock here. Good. Then you move on to I'm listing some of the trade receivables and current assets you can get. Then we have trade receivables. If you don't see trade receivables, you will see debtors. Okay, so let me show it here. Trade receivables or debtors. Okay, you bring it here. So if there was provision for doubtful debts, we have to do some calculations. So if there was provision for doubtful debt, you bring your trade receivables here. Then your provision for doubtful debt will come here. So we are going to less provision for doubtful debt. You see, I said if there was something like this, you check for the new provision for doubtful debt, whether it's an increase or decrease. But with this one, what you are going to record here is the actual new provision for doubtful debt. What was the new provision for doubtful debt? That's what you are going to less from the trade receivable. Okay, so you less from it. What you get, you show it here. Okay, good. That is if there was provision for doubtful debt. If there was none, you just show this one here and continue. You get it. If there was no provision for doubtful debt, this will be here. Then we'll be continuing our normal system. Good. So after this, if there was any expenses prepaid, you show it here. If there was any income accrued, you show it here. What am I trying to say? These expenses can be any expenses listed in the travel. Okay, so they can tell you that that particular expense is prepaid. That prepaid amount relating to that particular expense is what we are going to show here. You get it? But in the profit and loss, we are just going to subtract prepaid from that actual expense. Okay, but for the balance sheet of financial position, we are just going to show that prepaid amount here. So if it was rate prepaid, then the amount. If it was income, the income accrued they talked about and the amount. You get it? But if it was in the profit and loss or income statement, because it's accrued, we are just going to add that income we are talking about. Good. Then we'll add our cash bank. Okay. Sometimes the question can join together, cash and bank and the figure. You get it. Sometimes you can also separate it. Good. So after getting it, you total your amount here. You get it. Then you come to your current liabilities. So I'm forcing to let it. Okay. So current liabilities. Okay, so under current liabilities, you will be getting your trade payables. You can also get, so with the same thing, you can also, if you see any expenses owings or accrued, income prepaid, bank overdraft, they are all current liabilities. Okay. So if you see any of these, they are current liabilities. So for that one, I'm going to show here. Okay. So after getting or adding them up, you bring them here to subtract from this. Okay, so then you add them up, you show them here. Then you subtract from this. Okay, so after adding this, you show the total figure here. Then you subtract this from the total current asset. Okay, so it's going to be a current asset minus what? Current liabilities. Good. So, as I said, you see this one is expenses accrued, but this one was expenses prepaid. So take note. This one is income accrued. This one is income prepaid. Good. So the explanation here is that it's an asset because if we've been able to pay our expenses in advance, it's going to serve as a benefit in the next period. Do you get it? If we receive or if we are owing an income, it's going to be deferred to the next period, which is going to be a benefit to us. Same to the expenses accrued. If we have any expenses owing, the next period we are going to pay our expenses. Okay, so we're going to add that to the next period expenses, which is going to be a liability to us. You get it? Income prepaid. If we receive our income for next year, we are not going to receive. So it's going to be a liability for us. So after adding the current liabilities, we subtract from the current assets, and we are getting your working capital. Okay. So this is our working capital. But because there's no space, you just let me just bring it here. Because normally that is how it is. So after adding subtracting this from this, we show it here. But I wanted you to know that this one we've gotten here is our working capital. You get it? Good. So you are going to add the working capital, this working capital to this non-current asset. Good. Then you are done for the first part of the balance sheet or financial position. You get it? Good. So after this, you move to your finance by side. You get it? So after doing all this, we are now moving to finance by. Good. So these are some of the items under the non-current, current assets, and current liabilities. So we are moving to the finance by under the financial position. Okay, so we are going to continue with the finance back. Okay. So with the finance back, what you have to know that it contains or it has the capital, the net profit and drawings. Okay. So with the finance back, what you are going to list under it is the capital, the net profit or loss and drawings. Good. So we have our capital, the net profit or loss, then drawings. Okay, so we are going to show those items at the last column. Then we'll add them. Okay. So the capital that will be given to you in the question, you show the figure there. In the income statement, whether you had a profit or loss, when you had a net profit, you add it to the capital. Okay. But if it was a net loss, you subtract from the capital. You get it. So let me show it here. Net loss. Okay. So the net profit will be added then the net loss will be subtracted. Do you get it? Good. And the drawings here will be subtracted from the figure. Do you get it? What we will get. So it's basically, if it was a net profit, it is capital plus net profit minus drawings. If it was net loss, it is capital minus net loss minus drawings. Do you get it? The drawings here consist of the cash drawings and the goods drawings. Note, if the goods drawings was in the trial balance, fine, treat it under the profit and loss account or the income statement. That means it's just going to subtract it from the goods, the purchases. You get it? But if the goods drawings was shown in the additional information, you treat it twice. So after treating that goods drawings or letting it from the purchases in the income statement, that same amount will come here as drawings. If there was any cash drawings, we add the goods drawings to the cash drawings and show it here. But if there was only goods drawings, that's what we are going to show. But if the goods drawings there were no goods drawings, and if there was only cash drawings, we just show the cash drawings here. You get it? But if there were cash drawings and goods drawings shown in the additional information, we are just going to show it here. Do you get it? Good. We are going to show the goods drawings. The goods drawings have to be part of the drawings. If there was cash drawings, we add the goods drawings to the drawings and show it here. Do you get it? But if there was only cash drawings, we just show it here. Do you get it? So that's all for the finance part. Good. So when we are done with this, we move to the non-current liabilities. Which we normally have our loans or bank loans. Okay, so we are going to add that loan to this amount that we are getting. Okay, good. So after that we are done. After you get this, make sure, or after getting this, the amount you get here has to be equal to the amount we total before coming to the finance bank. Okay, you see we added our non-current assets. Good. So we are done with the statement of financial position. So this is how it looked like. We added non-current assets. So let me show the abbreviation non-current assets. Okay, then we left it there plus current assets minus our current liabilities, like this. Okay, after lessening this, we should get the finance by we are going to get working capital. Okay, so finance by plus the non-current liabilities. You get it? Good. So it's basically non-current asset plus our working capital has to be equal to the finance by plus the non-current liabilities. Do you get it? See, first of all, we added our non-current asset, we left the amount there, went on to calculate for the current asset, total them, subtracted the current liabilities from them. Current assets minus current liabilities, we have working capital. So this non-current assets, this working capital was added to the non-current assets we did. So after adding this, you have to get the same amount you had for this one too. You see this finance by, we added, it was here. We look for non-current assets, it was here. So when we add this amount has to be equal to what we get for this. Do you get it? So to show the accuracy of what you did. Sometimes you can get the same figures, but it might not be correct. So just check that what you are doing is actually correct. Okay. So it has to work balance, basically. Good. So sometimes you will not get any non-current liabilities, but you have to follow the procedure to make sure it's balanced. You get it? Whatever way or whatever style the question will be beat, it has to be balanced. You get it? Good. So that's all for the statement of financial position. Good. So we are going to end here. The next time we meet, we are going to look at a question under the into a financial statement for sole proprietorship. My name is Mensa Isaac. Make sure you like, subscribe, and share this video to others so that they can also benefit. Bye.